Good afternoon, traders. This is Christian from Choppy Trade Group, and this is your end of day market recap for Monday, the 11th. Let's get right into some of the themes. Before I do that, risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Please read the full risk disclaimer right there. So yes, themes of the day, a little bit of choppy price action, but we actually did something a little bit different today. We actually kind of resolved the day higher. So I will go over that in just a second. Well, actually, you know what? I'll do that. I'll do that first. I've got a spelling error in here, but and then we'll go through the rest of the themes of the day. So here we are, S&P. This is a little bit so far a little bit better price action than what we saw last week, as a whole. Last week and towards the beginning of this month, we've been heading down. So we actually had a nice green bar today, and I think that's actually like the first one, believe it or not, even though we're at the 11th of the month, but that's the first like green bar that we've really seen here. So kind of interesting. But I don't think I don't think this kind of resolves anything. We're below the 50-day moving average still. We're getting back above those short-term moving averages. Here again, if you're a regular viewer of my videos, you know that I spend a lot of time on the 1-hour chart because it really kind of gives us some short-term levels to watch and some short-term signals. Notice that for where we started the week, right in the middle of the value area, so no 80% rule, which is where you start above or below the value area. But here we started right in the middle of the value area, but we're going to have some resistance, and that resistance is 45.46 in S&P futures, or in SPY, it's going to have a different, so here's where it gets a little bit cloudy, right? And, I talk about this sometimes. Sometimes you don't need, like, in my opinion, like you don't need an exact level. You just want to kind of, a little bit of an understanding in the short term. So right now we're a little bit above the value area in SPY. And if you're long, you could use this level to basically trade against 447.38. So as long as you have a level to say, hey, if you have an idea that you wanted to be long going, maybe going into some of these economic reports that we have later in the week, right, which are what, Wednesday and Thursday, I believe, of this week, right? Here's the CPI report, which again, people are going to be focused on this, and until they're not. But so yeah, Wednesday, the CPI report, again, notice it's a 0.6 that they're looking for, so there's a higher expectations. Again, I think that's because of the move in oil and crude over the last month, but it's a 0.6, so they're pricing in, the expectations are set a bit, the bar is set a bit higher. But regardless, that's what you're going to hear about for now. But if your idea is that that you're going long, right? Always with an idea, whether it's short, long, whatever, as long as you have a level to trade against. And for SPY, I would say 447.38. You could be long versus SPY, and then if it breaks that, you know where to get out. All right. One other thing that I wanted to review today, and then we will go to the Qs chart. But we've been seeing these types of days where it's a little bit, the rally pre-market. Again, it's a reminder that the majority of the money is made. Like if you look back past the 30 years, the majority of the money is made in the overnight market by buying the close and selling the open, right? So we've been seeing that, right? If you notice what happened today, where the indices rallied into the open, and and here's where we are. And then, it reminds me of an old saying, and I hope I don't offend anybody with this one, but, when I was a trader way back when at Merrill Lynch, I always used to hear that the first hour of the day is amateur hour, right? And it kind of like that seems to be playing out a lot recently in regards to, like, sometimes the first 5, 10, 15 minutes we go higher, and then we get smacked down, and then the next thing that happens is price needs to kind of regroup. Now on Friday, we weren't able to do that, right? Here's what happened on Friday. Same thing, like a little bit of up, and then just a move down for the, sorry, Thinkorswim does that. And then it was just kind of like gravitating lower for the whole day. And that's kind of what we've seen so far in September. Today was a little bit different because we saw the usual, we saw a lot of things begin to kind of break down. Like Apple went down, Nvidia went down, some of the other chip names went down too. But there was other things that kind of ran with the ball, and again, a lot of that time that's happening is sometimes around that 12 o'clock hour, that you are starting to see things change a little bit. And so we basically, we did get back to where we were for the S&P, right where we opened. So again, a little bit better than what we've been seeing in terms of the price action. Q's different. Right, the Qs are now sitting above the value area for the month of September, so there's been some relative strength there. 375.29 is a level to watch, right? So again, different looking than what I just showed you with when there was only one green bar in the S&P so far in the month of September. But here you've got a couple of these things, and if we can hang in here, notice how the picture looks different, right? The S&P is inside value. It's below the 50-day moving average. Qs are above value and above the 50-day moving average. So, I think this is kind of, even though we've seen some other areas like energy act really well, this is still showing like a pretty good technical picture. And if we stay above 3729, my idea is to be, long this versus, some of the other indices, right? Here's what the 1 hour chart looks like. Right now, we did take out this upside level. So we, again, there just hasn't been a lot of things where I could say in these end of day videos that, oh, this is great, right? Because, we did come up and take out, a target here. And that's going to be something to watch. That's 377 in the short term. But that's just what it is, right? I mean, a lot of times you just don't get a clear path. But at least you're getting like, I often refer to as the MarketWebs as a roadmap, right? Well, the roadmap is telling you, hey, we got to the point of control of last week, and we got up there, and maybe we'll pause, maybe we'll come in and sit back down here, and that might end up being a better trade because, chasing the price action, that's been a recipe for disaster as of late. But if we can stay above 377, I would say that that's fairly constructive. Reminder that Apple has their event day tomorrow, which could move things a bit, could jostle things around. And then of course the weaker, which is small caps, which underperformed last week, just dangling here above the 200-day moving average. It could be, I think a lot of people are starting to notice like, oh geez, this could be a head and shoulders, left shoulder, head, right. It's possible. And I would say if we break the 200-day moving average, I would really wait to watch this 181.96. But again, a lot of things can look like a head and shoulders, but they're not a head and shoulders until they actually break the neckline. It's one of the things that I see in trading over and over, that everybody wants to anticipate. Oh my God, this is what I see, I'm going to do it. Right. And a lot of times you really like waiting for the confirmation. I was listening to a podcast over the weekend, and really, what trend trading is about. The podcast wasn't about trend trading, but this particular trader mentioned, hey, I'm looking to capture 80% of the move. I don't care about the last 10%. I don't care about the beginning 10%. I care about the middle, the 80%, right? So when you put things in that context, I think it really helps to say, hey, you don't have to get to try to get every single turn right. Right. Because if it's really a nice move, and I know that's like in this chart, forget about this chart because it's just sideways as hell. But for the most part, once things kind of turn, there should be some runway, after that. And I know that this year, it's something else that I've been saying recently is that, forget about like classifying the market as bull market, bear market. I felt like this year we've seen a couple, a few months where we've acted like a bull market, but we've also had a few months where we've acted like a bear market too. So you just have to kind of be patient and wait for those times. Obviously this felt like a bull market. But there's other times where we move sideways and we can't hold the bid and it feels like a bear market. So, rather than trying to classify these things, it just helps to be able to basically understand where things kind of look and feel like they're changing, and that comes with looking at market breadth, which by the way was not bad today. I always complain about market breadth when it's a negative day, but today the breadth was not bad. All right, so that's a little bit about the indices. I'll move to a couple of the big movers for the day. But the dollar, I really don't have the spelling in here. So kind of mixed macro, because the dollar was weaker today. Finally we got a little bit of relief, and I think that helped things today. I think the move in the dollar recently has outweighed the move in rates a little bit, but we'll have to keep an eye. We'll have to continue to keep an eye on both of those because rates were higher today again. You could see TLT was down another almost 0.75%. So I don't think that can continue on that trend. So we'll see if these things kind of change around. And again, maybe the economics this week might provide some type of macro direction, because certainly the dollar and rates will move based on what the CPI and the PPI report are going to do. Next, I wanted to talk about these two big stocks in consumer discretionary. Tesla. I mean, you look at this, right? And of course, the catalyst for today was Morgan Stanley upping their price target to the street high. I'm not really a big fan of that. I'm not a fan of that particular, I'm not even going to say who it was, but that analyst, I don't think has been a very good analyst in general. Sorry for the criticism, but I think that analyst for the whole move for Tesla, I don't think had a buy signal. I'm talking about in years past. I think Morgan Stanley finally put a buy. They put a buy on the stock, and then they did one of these. We have a bull case and a bear case. What is that? You're really just being general and not, you shouldn't even say anything. If you have a bull case and a bear case, just say you don't know. It's better to do that. So regardless, maybe Tesla was ready to go here. You got a nice move out of this value area. This was a chart that I tweeted over the weekend, and I said, watch the 50-day moving average. So regardless of what the news was, right? If you would have just taken that signal and basically run with it, price did get above this virgin point of control. So it's impressive for Tesla. And I've been long Tesla in my TTG trend portfolio. And I've been staying that way, even though the stock has been under pressure. I've kind of stuck with it, but I do not have a position on in my trading account. It's just been a little bit like last week, the price action I thought was too difficult, right? Every time it looked like it was going to move higher and kind of begin to trend, it would turn back the other way. And when it turned back to the downside, I guess if you bought the dip a few times last week, it worked, but you really had to be super disciplined because you didn't really get much out of buying the dip last week. Now, if you left that into today, you got rewarded, but it stood here for a little bit. For a few hours at this previous area of high volume, virgin point of control, and then it moved higher. So what to do with this stock at this point? Well, I would go back. First of all, when we look at the weekly chart, and that's another reason why I stood with it, is because it didn't break the bottom of value. It almost came in and tested the bottom of value, but the 80% rule, the bullish 80% rule, is still in effect, right? That's when we did break into the value area. Now, we didn't get there obviously in a straight line, and it remains to be seen if we will get to 320. But I decided that I was going to, for longer term, I was going to stay with that 80% rule. Now, what I would do with this stock is, if you want to be long, set your stop to around like 267, right? And that's the virgin point of control. And that's about halfway through, maybe a little bit more of this green candle. And that's because this was a high area of volume that we haven't revisited. All right, so that's number one. The other stock that had a monster move, and I don't even know what the news was in Amazon today, but it did get going, and it's back to, notice what it did on the last, speaking of virgin point of control, it took this out and completely, like, that was as far as it went after earnings. Now it came back, tested the 50-day moving average. Not exactly easy here, because if you chased any one of these green candles, you were penalized for it, because this was a big move down. Probably shook some people out. Then we started to see a move back in here, and then three little, inside type, not inside days, but smaller red days, and then the last 3 days very nice. So, if we look up at this, where could this be headed to? Well, 153.66 is a VPOC up there. I don't think there's anything else here on the 1 hour. So again, notice where we are, right back to where we were. And then if you look at the weekly chart, where could we be headed here too on the weekly chart is 147. That's your next area of resistance. So I would be cognizant of that, right? And that's another one where the 80% rule has been active. You know, back in here, this triggered the 80% rule, and 147.74 would complete that. Now, these two names belong to the XLY ETF, and they certainly, you know, so I think that this is one of the most interesting charts of the day. To go along with those moves. But if you look at the constituents of XLY, you'll notice that Amazon is 25% and Tesla's is about 19%. I mean, these two really dominate. Just like in the XLC ETF with consumer, with the communications ETF, it's Google and Meta that dominate that ETF. In this particular one, XLY Consumer Discretionary, you've got two companies. The next company down is Home Depot, which is only 4%. So again, it's a market cap weighted ETF, but it's a great way to like an under the radar way to kind of own those names. This, from a technical aspect, it has to get through 174.21. That is exactly where this thing stalled out in the middle of July. So that's an important level to watch for the consumer discretionary ETF. Also, you know, one of the things that has pretty much remained intact over the last few months is when you look at XLY versus you know, kind of like a risk on risk off type gauge, is when you look at XLY and consumer staples, XLY over so consumer discretionary over consumer staples. And if you look at this over the last 5 years, you can look at, again, a 1-year chart too, but you know, this thing is trying to resolve to the upside. So again, it's a little bit more risk on, of course, when you have consumer discretionary outperforming consumer staples. Notice where this thing peaked, right? That was right in the middle of 2021. And for a good, you know, while there, you know, basically all the way to the beginning of this year, staples has outperformed. So, you know, you've got something changing and the trend is still intact here for a reversal in consumer discretionary. So what else? So those were a couple of the bigger things today. A couple of the other, you know, a couple of the other themes of the day was that energy really got sold a little bit. Now, again, reminder that in addition to the economics that we have this week, on Friday, you also have a quadruple witching. Well, it's really a triple witching, but you know, of course, you know what people will focus on is the monthly options expiration. But the other thing that's really important is that all of the major indices, you know, there's so many assets that are being that are tracked by ETFs. So those ETFs are going to change their weightings. Consumer discretion, all the consumer discretionary ETFs, just like XLY. Now they won't change much. The ones that will change a little bit more is the equally weighted ETFs. Those will all rebalance. Remember, they rebalance September, December, March, and June, right? Quarterly rebalancing. So again, it's one of the ones that people don't talk about because they don't really understand how it works. They'd rather just say, you know, it's options expiration. But really, there'll be a ton of volume that happens on Friday because of that S&P and NASDAQ rebalancing. And again, those indices rebalance every quarter. All right. But yes, to finish out the thought there, you know, energy, you know, had a little bit of a reversal today. You know, if you stayed overweight energy, those names got hit from the open. Like those names were outperforming in the beginning of the day. I took my profits in some of these trades today. Just bring this up if I can. But you'll see, I was long a couple of the refiners, and I took a target in Valero, and I actually got out of the PSX this morning at 124. So again, two refiners. I don't like to own too many names and too many groups like that for too long, but you know, those were some real nice trades. And again, you know, a couple of these trades I didn't even have on that long. I think I put the PCX on last Wednesday, I believe, but I did get involved in some CCJ. That was a name that I was watching towards the end of last week, right? Again, it's a little bit you know, overbought here, but you know, the trend is intact. You know, I just was watching this last week, Now, it still doesn't look like it's ready. It's having some difficulty around this 3740, 3750 level. So maybe there's a seller in there who's kind of preventing that from taking the next leg higher. But I think it could be a matter of time before this resolves. Again, I always go in the direction of the trend. But so 2740, 2750. Also, even though this wasn't a great day for energy, I like this diamond offshore. I put on a starter position in this one as well. So very interesting there. A couple other names. We talked about this, and I put this chart, not Tech Resources, but Team. By the way, some of the material names had a really nice day today too. But I like this team. We talked about last week, right? One of the sectors that really caught me by surprise was what software was doing. Right now, again, Oracle reported after the close. I think they're down about 5%. But I don't know if that's going to derail this nice move. And again, you look at the difference between the S&P right now, just so that you have this fresh in your mind. But S&P, we're not over the peak of where we were in the beginning of the month, nor July. Look at the difference between what IGV is doing. Right, that IGV is trying to break out to the highs for the year. So I view this as constructive. And yes, one of the names that just by kind of going through some charts today, I found Team. Right, look at the so I got a lot of questions about this because I bring this up quite a bit with the value areas, right? When there is a super slim value area like this, it usually means a big move is coming. It's not always, there's nothing 100%, but when the price action is really tight, usually a big move is coming. I talked about this about a week ago and 2 weeks ago in Weatherford. Now this had a super slim value area. So it was set up. See how slim this value area is on the 1 hour? And again, this could be on any time frame, by the way, but I like to find these for short-term trading opportunities off the 1 hour chart, and look at what like Weatherford began to really trend once it broke out of that slim value area. Now you have to be careful with this because a slim value area price can pass through this very easily. So sometimes you'll see a move in one direction and then it goes in the other. Sometimes it'll go up and it will end up going down. So you still have to be super disciplined with this stuff, but you want to just be cognizant that they could really begin to trend off of one of these slim value areas. So I like Team. I think Oct is another one that's interesting too. Again, not as slim of a value area, but I do like the breakout here in Octa right after good earnings. So again, these are a couple of things that I'm watching. I think this IoT I think is for me has been a tricky trade this year. But I like how this thing is consolidating in here. I also like this, just names. I don't know all these names. I'm just kind of watching. I was actually really surprised at this IONQ on Friday. This thing had a really nice move. It had a horrible move, like down. And again, a reminder that how volatile some of these names are. I think this INOQ, like, so I'm not giving advice or anything like that, but you've got to change your position size with some of these things because look at the volatility in this name without bringing any volatility metrics, but just looking at how this thing moves. But it was down 10%. Like 10%, and there's no news on this name. It's just how it moves. One day the thing could be down 10%. So you can't put the same size on unless you're, you really like volatility because it doesn't move as, even if you trade Nvidia, right? Or if you trade, some of the other tech names, this thing could really move when it wants to. And it was down 10% on Thursday and it came back and it impressively, it was able to rally back. So I view that for now as kind of on the impressive side. But I would still, you got to really monitor this trade very carefully. So that's it for today. I'll try to keep this video short, but I think I think we're already past a certain amount. But I think there's definitely some names to keep an eye on, and we provide a watch list, every weekend, and then we build on that watch list as the week goes on. By the way, we will be rolling out a new program at TTG, so stay tuned for that later in the week. Have a great night, everybody.